So it is said that if you walk into the market with money, you walk out with knowledge. But if you walk in the market with knowledge, you're going to walk out with money. Hello and welcome. Today we are going to learn what is absolutely needed to be learned. If you want to make a career in trading or if you want to just know something about trading, the first thing, the absolute building block is the candlestick. Now, we're not going to get into the boring history of how the candlestick derives its name and all that. We're going to go directly to what is needed and how much useful it is for us. We're going to go to that point directly. So, cut the cap, and right now, we're going to do this. First of all, the first thing that we need to know, why? Why do we need to know about the candlestick? Why is it so much important that you cannot move one point, one step forward without knowing about this? So every phenomena that is happening around you communicates with you, and these candlesticks that you see, these candlesticks are basically the way market communicates with us. The market tells us what's happening, what's important, and this can be termed as the language of the market. This is how we know what is happening. This is how the market tells us what is the mood of the market, what is the trend, what's happening that might going to trigger some future events. So first of all, this is how a candle looks like. This is what it is. First, we're only going to focus on to the green candle. Okay, the red candle is basically the opposite of everything that we're going to learn into the green candle. We will cover that too. First thing, a candle has different parts. The middle part, that is like this filled up area, this green area, this is the body of the candle. The upper, this wig that you see, this is sometimes called the upper shadow, whatever you can call, but this is part of the candle. And then there is one, the tail at the bottom, this is also the part of the candle. Now, what do they signify? What is the meaning of all this? The point of the body, if we're talking about the green candle, green means bullish. Bullish means when we're going up. We have covered that. So now, when you look at this, the beginning, this is where the candle opens. This means at any given time, if it is, uh, let's suppose that we are looking at the market from 10 a.m. Okay, this is 10 a.m. right now, and this is a 1 hour candle. We will get into the time frames right now. Just understand what the candle is, because there are types of candles, but the basics remain the same. And once you get to them, it's pretty easy from there. And it's really more easy than you think it is. Now, the point from where this opens is the opening price. The candle, this is the body. This is where the price was moving. And at the point where this body closes is the closing point. All right? The body signifies the opening price and the closing price. The wig is the high. What do you mean by the high? This means that suppose there is a market and some person is selling something. At one given point, suppose that he was selling this for, let's just say, for 10. And at any given point, he was also able to find some customers to sell it for 12 or 13 or 15. But at some point, like late in the day when there were not much people around to sell your items, the person was also willing to sell it for 8. So his standard price from where he opened was 10, and the high was able to 15, and the low would be 8. And suppose at the last time, the last commodity that he sells is for 12, so that would be the close. So basically, high is the price where the stock was actually trading. The stock was actually being sold, but it could not hold it and came down. This high is the highest price, the stock has touched in this given time frame, in this given candle. This is the highest point the price reached, but this was not the close, because some candles would be like where there you will find no wig at all. That means the price closed at its highest. It did not come down. I hope you understand what I mean. The low is the same thing. The price was able to be brought down to this point. It was trading at this lowest, but then it recovered. This did not close here. All right. So what is it telling you? It's telling you the opening price. All right. It's telling you the closing price. It's telling you the high. It's telling you the low. It also means, because this is like a sample picture, so you have to understand that some candles may have a huge wick. That means the price was able to reach pretty high, but it also fell pretty quick, and that gives you a lot of ideas of what's happening. The red candle is basically the bearish candle. Is everything is opposite here. Now the opening is at this point, because a bearish candle, it means the price is going down, so the open will be always higher than the low. You understand that? So this is where the price opened, this is the body, this is where it closed, this was the lowest point it was able to touch, but well, somehow it managed to get a couple of inches higher. And now from opening, the price was also able to go to this high, was able to touch this high, but then, well, in the end, it fell down. So there is also saying that you should never ever trade in between the formation of a candle. Once the candle has formed completely and the next candle is starting, you trade at that time, because you don't know. At one point, the price was going up and then it was going down. So to be sure, you let the candle be completely formed and then you look into it. All right, now we're gonna have one simple quick example of any chart that we could find. Let's have this chart of the candles so we can understand what the candle really is. All right, there you go. And this is pretty much same in every chart. Whatever chart you look, you can just pretty much randomly open up anyone. So look, you see various sort of candles, and right now they are not just a chain of green and red and green and red and various sort of shapes. Now they're telling you a lot of things. Now they're telling you, for this candle, this is open, this is high, this is closed. Now you understand that this candle had a huge pressure on the up. When it was going to up, its wick is big, so well, the market fell. This happens. So you're able to understand and make out pretty much the basic things, that opening and closing and high and low, and what basically candlestick is. Now these are not randoms to you anymore. Now one more thing important here is that, in order to, as I said in the beginning, that when you get into the market, you walk into the market with money, meaning that you open your account without knowing how to deal with it, without knowing trading. You're gonna walk out with knowledge, but not with money. And in the end, you want to come to the market to not just gain knowledge, but also make some money. So when you walk into the market, you want to walk in with knowledge. And this is a rule. When you walk in with knowledge, you get money. And knowing the candlestick is the basic starting point, but there are like a few more simple basic things that you should be clear about in your head, like what is volume and how do we look at volume. Like, I'm not gonna. And second thing that you need to know, like volume, as I said, and how you should look into it, and time frames, what various time frames are and how they work, and which time frame has what sort of specific characteristics. And also, you should understand the introduction to charting. Knowledge, you come with knowledge and you go with money. Thank you.